Studios. The AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarley. Great to have your company as we count down to the Fed rate decision. Also, of course, the Bank of Canada handing down its interest rate decision as well. We are finishing the day's trade pretty flat there on the CBO 200. You can see a bit of a wobble throughout the day, but we've kind of not really moved anywhere very fast. The S&P ASX 200 just marginally higher, up by about 4 points as we head into the close, and most of that thanks to some good gains coming through from the miners, in particular the gold stock. Silver has also been a theme of the day. We'll get into that with our silver bug Mark Gardner from MPC Markets coming up shortly. But to the themes of the day, it really was somewhat of an ASX seesaw today. Really, we're trying to get a handle over what we saw in terms of what many people, including AMP economist Deanna Messina, told Andrew earlier was somewhat of mixed messaging from the RBA yesterday. On one hand, you had the very sort of calm tone of that statement that came out when they left rates on hold for the fifth time this year. But then in the media conference that I attended, there was somewhat of a very hawkish stance coming through from the governor. And in fact, in response to my question, she came through saying no additional rate cuts are needed. That saw the Aussie dollar spike and really gave a little bit of uncertainty to our market participants. We talked though about the silver lining, and that certainly was in that momentum that we saw moving through from a lot of the silver players today. As I mentioned, we'll get into that with Mark Gardner from MPC Markets. And here we go, FOMC expecting very much an interest rate cut from the Fed later tonight. But it then depends how many more we're going to see. David Sokolsky from Carrara Capital telling me earlier he thinks that maybe there'll be another 3 cuts, but that could be actually also a very dire indication of how weak perhaps the economy could be. Let's get into some sectoral moves locally as well today. Kicking it off with the tech players. They were under pressure, particularly on Wall Street overnight, and we followed through with weakness in our tech sector today, with the IT sector down by some 1.6%. Elsewhere, though, I mentioned some strength coming through in the miners. We're looking at a bit of a higher iron ore price. We've been looking at the momentum in copper. Fortescue there up 1.4%, $22.70 at the moment. And as we continue to monitor the RBA decision, we were looking at as well a little bit of movement in retail stocks. Droneshield, meanwhile, the market leader, up by an impressive 17%. Retail investors piling into the former share market darling, and this after it came through with a plunge over the last month or so. And of course, as we're seeing hedge funds ramp up bets against Droneshield. Ramelius, well, it announced a $250 million on-market buyback, and shares rose 5.5%. GQG Partners also moving firmer. It did have net outflows, though, widening in November. TPG Telecom, of course, we saw the executives face a Senate hearing yesterday over those 000 fatal calls, but it has raised $73 million in a retail component of its underwritten reinvestment plan. And 4D Medical had a good day, up 7%, confirming that the University of Miami commenced its clinical use of its respiratory imaging technology, becoming the second US academic medical centre after Stanford to adopt the system. And sticking with the theme of Ramelius, that was the stock of the day on the call. Andrew spoke to Andrew Weilant from DP Wealth Advisory, Henry Jennings from Marcus today. They were both in Christmas theme too.
Shows how much cash these gold miners have got, and will continue to pile up in the corner, because you know the gold price is where they are, 6,300 Aussie dollars. That is a big price. There's many a gold miner, including Ramelius, that is going to be pretty happy this Christmas. And the buyback is a sensible way of deploying capital. I guess the fear always is that companies will do some sort of M&A, which may not work out quite so well. So a $250 million share buyback gives it flexibility as well. The dividend policy has doubled to 2 cents from 1 cent. And the buyback, as I say, does give it that flexibility.
Both the chair and CEO continue to buy. despite the fact the share price is continuing to rally as much as it is. I was looking at it the last time Henry and I looked at this was now a couple of years ago. Daily turnover has gone from $5 million a share, or $5 million a day. For Ramelius, it's now $44 million a day. So there's certainly plenty of interest in this one. You've got insider buying, which is a positive. You've got a very supportive macro environment, so I think it's a buy.
All right, let's welcome our Wednesday guest to the COB, Mark Gardner from MPC Markets. Hello, Mark.
Good afternoon.
Let's talk about then that somewhat mixed messaging from the RBA, because if you read that press statement after the meeting yesterday, a lot of people were saying, look, it's calm. Tony Sycamore from IG said certainly not a finger on the button of wanting to hike, but then it seemed very hawkish in that press conference.
Yeah, I think the press conference, I mean, you got to think about these things in terms of jawboning, and that's one tool that the RBA has, and I think that there's no immediate threat for, I mean, albeit a good headline, and as I was just saying to you before air, you and about 2 other people should be allowed in that press conference, and the rest of them should not be allowed in there.
Keep the compliments coming, I love it.
Oh, no, but I mean, there's just 6 months ago, one of the journalists asked whether the governor felt like she betrayed the Australian public not easing. And this is why you trust in your RBA, and this is why you don't send, your gossip mag journalists to an RBA press conference. So, but yeah, look, and I think she's just trying to calm people down, really. The government is just not helping, low deposits for home loans and all this sort of thing. It really is, traditionally you've got fiscal and monetary policy going in the same direction, and the government just literally now makes the RBA have to be the adult in the room all the time. And I think it was just Michelle Bullock's way of going, just calm down, don't go and spend the farm at Christmas. There's labour pressures, the labour market's tight. Again, another government public service spending is through the roof. I think the budget blew out by over $1 billion within 7 months. So all of these factors aren't helping. So I think she's just waving a bit of a stick. I don't think they're going to turn around and be, hiking anytime soon.
Yeah. She did make a good point about, maybe not overspending. She said she's going to Boy and Bear. I'd not heard of Boy and Bear, but Henry Jennings told me he had. Had you? You're of the same vintage of me. I don't.
Band?
It's a band. Yeah, we can move on.
I think they're from the Northern Beaches. That's why.
Oh, okay. Let's move on to the Fed, who is likely to cut. What sort of messaging do you think we'll get from J-Powell?
I think we're in the high 80s now, but there's 5 fairly public voting dissenters out of 12. I think this is, I can't see us getting a cut and a dovish statement. If we get I'm in the camp that the Fed could very possibly go, we haven't got enough data, because I think we're still waiting on October employment data, October inflation data, etc. And that was when the layoffs started to happen, and when tariffs were starting to come in. I wouldn't be surprised if they didn't cut and then gave a dovish statement. The market's expecting, a cut and then a hawkish statement. So, pretty much of a muchness, I would say overall. But we're 1% from record highs. One thing that I think is completely off the table is a cut and then dovish statement. I just don't think it's going to happen. That'd be irresponsible from, and as Michelle Bullock showed yesterday, they've got to be the adult in the room with governments that aren't necessarily doing, the right thing, and an administration that's very haphazard. But in the US particularly, they'll have to keep things fairly measured, I would say, even if they do cut. But yeah, I'm going to go on the record and say I think they might say we'll wait until we get more data, because that is 15 years ago, that's exactly what they would be doing. It's only there's a lot of public pressure now on central banks, which didn't used to happen back in the day.
Well, I reckon if they do, then we might see some wobbles in the market tonight, because there's a lot is priced in. But getting back to our market, we were talking about the silver lining, a lot of momentum in silver stocks. Yes,
it's been a long time coming, but Team Silver's finally coming good. So it's been an extraordinary year. It's probably up nearly 100% now in 2025. So yeah, we've had a couple of silver miners, Andean Silver. I think it was Jonathan Takadena. He's supposed to be in Team Gold, but he stole one for his Advent pick.
You're both on the same team.
But up until recently, I didn't know what it was like to be in the lead. But I would say Platinum as well probably starts to play catch up at some stage. It had an okay run recently, but there's a lot of concerns around physical delivery on some of the futures exchanges. So first notice period went through on COMEX, and there was a record, or close to a record number that wanted to be delivered. And that causes problems because most of them just settle at cash. They don't actually go to physical delivery, and these sort of situations cause these spikes. But breezed through 60, and I think it's around 61 now, and getting close to that 70 target from a couple of weeks ago.
And what more broadly are you looking at in terms of where we go from now until Christmas? We love to talk about the Santa rally, but it sort of just looks like we're, stabilising maybe at these levels. Yeah,
I think the Aussie market's relatively cheap. Particularly, our tech sector's been under the pump quite a bit. I think our resources sector is pretty undervalued as well, I've got to say. It was the worst performing sector last year, and it was down nearly 20%. We've only really recovered that plus a few percent more. We've got copper prices at record highs, gold prices well through record highs. A lot of fringe materials and commodities at very close to record highs, or at least multi-year highs. So I think come earnings season, you'll see the likes of BHP with copper at $5.30 or 11,000 a tonne. It's going to get close to being the same as iron ore in terms of revenues. So I'd expect that there's probably some upside here. It very much depends on tonight, and I think that the US market is probably due for a pullback, whether they cut or not. Essentially, just a degree at which they had the announcement for the H200 chips last night. Nvidia barely moved. I think it was down 0.3%. It's lacking that momentum at the moment. So and we're going to need to see some more of those economic figures come through, because there were an awful lot of layoffs announced by companies in October in the US, and we generally celebrate rate cuts, but if the economy's slowing significantly and inflation remains stubborn. Stagflation's a real risk next year, and stagflation's a disaster for equity markets or markets and economies in general. So, they probably need to, just tame the optimism back a little bit. We'll be sticking to pretty high conviction themes next year, and not really playing in the fringes, because I think there's a fair bit of risk for the broader economy.
All right, Mark, thank you as
always.
Thank
you very much.
Mark Gardner from MPC Markets. As we mentioned, a bit of stabilisation or flatness on the local market. Let's have a look at some of the market leaders today. Droneshield up by 17% there. Quite a little bit more love coming back into that stock that's been dumped over the last month or so. Hyperion X is interesting. There's an IPO looking for SpaceX, in fact, to pursue a 2026 raising above $25 billion, according to sources. We touched on the gold love, particularly Ramelius with that share buyback, and Westgold also having a good day, up 5%. Let's have a look at some of the laggards today, including Iluka, which was down around 5% there. Pro Medicus also came under some pressure today. Reliance Worldwide, Imdex, and Bapcor, which of course had that profit warning earlier in the week. Let's have a look at the small end of town. Mark mentioned the momentum in silver. Andean Silver up by some 16%. Investigator Silver and Unico Silver also higher today. To the laggards, to the downside, I should say, European Lithium off by about 14.3%. Well, of course, what is happening tonight? It's all about the Fed, the FOMC rate decision. The Bank of Canada has a policy decision as well, and a couple of earnings, including Adobe and Oracle. Tomorrow, we have the jobs data for November, around 25,000 jobs expected to be created, and the CBA household spending insights, which is going to give us another clue as to perhaps why rates have been kept on hold. We are all spending too much, it seems. Let's have a look at where the local market has finished the day's trade. Pretty flat there on the CBO 200. And a quick check on where the ASX 200 has finished. It was up about 4 points as we went into match off. It's actually closed in the red, down 6 points to 8,579. That drag by Iluka and Pro Medicus really offsetting the gain that we saw from the likes of Droneshield and Ramelius. All right, we'll be back to recap what happened with the Fed overnight from 9:45 a.m. Eastern tomorrow. We'll see you then.